Hello dear traders, you're welcome to InstaForex TV channel with me, Kate Stichina. Positive statistics from China prompted another rally in financial markets. However, the probability is high that this is a dead cat bounce and the momentum could fade out rather quickly. The rally was supported by a sharp jump in an index of China's manufacturing activity to the highest level over the past 3 years. Moreover, economic activity in China's key sector rose to an 8-month high of 50.8. The indicators rebound above the 50 level threshold caused a further rise in the Brent crude price, which posted its biggest gain in a decade in the first quarter. Investors are buoyed by optimism over upcoming China-US trade talks. This extended the rally in prices. June Brent crude oil started its trading day with a 0.93% rise to $68.39 a barrel. WTI crude climbed by 0.73% to trade at $60.58 a barrel. Meanwhile, Russia's ruble started slightly high against the greenback and the euro during the early trades, having gained 1/3 of a percentage point from Friday's closing price. It ended the previous trading session with a more than 1% fall on reports that the United States prepared to use sanctions against Russia for its involvement in Skripal's poisoning. On a Monday, the USD rupee pair has been trading near the mark of 65.42. Against the euro, the ruble has risen by 0.2% to the level of 73.52. Improving activity in the Chinese manufacturing sector backed the yuan and the Australian dollar, which strengthened by 0.13% and 0.40% respectively. In addition, it provided a broad increase in risk appetite and helped the dollar strengthen against the Japanese yen. The USD JPY pair is trading higher during the Asian session, reaching the level of 111.15. Meanwhile, the US dollar fell against the euro and the British pound. However, not all data was positive, thus business confidence at big Japanese manufacturers worsened in March. The Bank of Japan's closely watched Tankan survey showed. The headline index for big manufacturers sentiment stood at +12 in March versus +19 registered 3 months ago. The index fell at the fastest pace since December 2012, hitting the lowest level since March 2017. That was due to manufacturers' reaction to the slump in demand for electronics parts, cars and machinery goods. If the economic recovery is the case for Japan, then the likelihood of new stimulus measures will sharply reduce. Markets rose precisely thanks to the prospect of a new stimulus. It is curious how the trade on Wall Street will take place today. That's all for now. We're waiting for you in our next release.